Markets are starting to slide again near the lows of the session. A lot of jitters out there about what's happening in the bond market, namely the 10-year bond yield falling below the 3-month money yield in the United States. What do we make of it all? Well, let's get some perspective now. Diana Avigdor is the head of trading at Barometer Capital Management. Diana, so good to see you.
Thank you very much. Thanks, Greg.
Not a great note to end the week on. Right now, we've got the Dow down over 400 points. We've worried about the yield curve. Then we don't worry about it today. We worried about it again. How do you see all this playing out?
We have been worrying on and off about this for some time now, and for good reason, honestly. An inverted yield curve is not a pleasant thing for economies going forward. Not every inversion is followed by a recession, but every recession has had an inversion before, if you can find the nuance in that. So, right? So just because we have an inversion doesn't mean, and it's also, it's a very tiny inversion, so it's kind of flat. It can go back on Monday. But certainly low rates are starting to worry people. And we started out this morning with the German PMI that took the German 10-year yield to a negative small rate. So growth fears are starting to emerge, particularly that Powell on Tuesday came out and basically gave markets the green light that there will not be a rate hike in 2019. Plus, we're due for a little bit of a pullback. Markets are a little overbought. We've gone up almost every day since December 26th, and then in some sectors we're actually taken back every single loss that we had in the Q4 2018. So we're due for a little pullback, but investors are positioning is much less bullish than was in Q4 18. So there's lots of money on the sidelines, and that's the tug of war that's going on this week in the market.
Now, given the backdrop of what we've seen, you felt the markets are a little overbought. Obviously, we're giving back some of it today. We're worried about rates. There's so much to think about. Where do you start putting your money if you want to put money to work?
Well, what we've been seeing, and so I'll start with that. What we've been seeing is that people are searching for yield in all kinds of other places, in the equity markets particularly. There's been some money that's flowing to the bonds too. You see how the telcos are acting. Some of the banks, even though there is another narrative that's emerging on the banks this week, and REITs. People are searching for anything that has a decent and secure yield. Utilities in the U.S., and then it's barbelled with the growth stocks that can be found in the technology sector. Not today, but tech sector, for example, in the U.S. is up about 22% since the lows. That's exactly how much it was down from its highs. So money has been finding growth and yield at the same time. From Barometer perspective, I would just say that we are not overweight any extra specific sectors in a heavy way. We are as diversified as we have been within the sectors that we like, which is REITs, financials, technology, healthcare, and consumer discretionary.
Now, we had an IPO this week of a brand that we're all very familiar with, and it was quite successful. It's only giving back a little bit of yesterday's big gains, Levi Strauss & Co. It's an interesting one given the fact that only a couple of years ago, maybe even last year this time, we'd talk about the death of denim because everyone wanted stretchy exercise pants.
That's right. Jeggings.
Is that what they called?
That's what they're called. They're leggings and jeans. Well, yes, it was an excellent IPO. It was very much in demand, much more in demand than the shares that were offered. And here is the point I want to make on this, is that a lot of merchandise, stock merchandise, what we call on trading desks, we call it merchandise when people want to move blocks and stocks are changing hands. When it does so, and it clears the market, and then it continues to go up, that's a good sign. We say that is a market able to absorb big blocks and change of hands. And we've had some IPOs and big blocks of stocks that came to the market very well priced and acting very well. Levi's is one. We know that there's a couple of big IPOs coming in the form of Lyft and Uber. And Pinterest has just moved their offering from June to April. So the market has appetite for merchandise. In Canada, we had a couple of big blocks that traded pretty well. Aritzia traded earlier this week or end of last week at a lower price than where it is now. And Northern NPI also cleared a block that's traded very well. So when blocks clear and IPOs come, and it's well lubricated and there is good demand, that's pretty good for the market. Like I said, investors are not invested in the same positioning as they have been in Q4 18. Positioning is very light.
Now, it's hard to know what's going to happen when the markets open on Monday after closing in about 3 minutes from now. Would you expect a bounce back from the sell-off?
Yeah, that's hard to say. Look, I am not surprised and I am not disappointed at the fact that markets are taking a bit of a breather. It's okay. It cannot go up every day. We're up a lot since the beginning of the year. If it was just to keep range-bound for a small period of time, let us see the earnings and go through the earnings period, which tend to be a little more erratic, I would be just as happy. But I think that sell-offs will be shallow and will be met with some buying, as I don't think there is much option in the market for where people would put their money. Economic data has gotten to be on the margin a little bit more positive. And don't fight the Fed, despite that the fact that the Fed has flipped from one extreme to another in a matter of 5 months.
Gonna follow the bouncing ball on that one. Thanks for that,
It's
Diana.
true. Thank you very much for having me.
There's Diana Avigdor, the head of trading at Barometer Capital Management.